Good morning, everybody. It's Chris here from Serene Education with the 4 Majors Notes update for the 15th of October 2012. Hi guys, hope you had a great weekend with family and friends. Let's have a look and see what's happening on our weekly charts for the Euro US dollar. Okay, last week's candle, very indecisive. You can see that we've had a pullback since mid-July to the highs that we saw just recently in mid-September. And since then, price has pretty much been pulling back and then consolidating in a consolidated range. Just above the 23.6 February area here at the 12,900 mark. So the institution is still looking negative. Pretty much you can see prices still falling to the downside, and you can see that major trend still very much in favor. There we go, you can see it, and the institution moving average also above price. So price is still looking negative. We've had a consolidated range here, however failing to actually break above this consolidated range to the high side here, this prior swing. Okay, a lot of consolidation here through the early parts of this year, and yet again we've seen a current consolidation, and if we see a bearish engulfing candle here, then we're going to see this as another swing low, a high, and it's going to be lower than that one, and it's going to be lower than the previous one, and you can see the overall direction is still looking negative at the moment. So then is really going to stop all this consolidated with potentially a bearish outlook is a bullish engulfing, and it needs to get and trade above this current high here at the 13,1500 mark. If we look at our daily chart, you could see that consolidation. 13,1500 was the prior high, and we had an indecision. There's an evening star formation here, and prices reverted to the downside and going back towards that institution moving average. The one thing to be aware of here is the institution moving average has been broken now for the first time since the same time last year. On the Euro US dollar, you can see the CTC, the histogram on our side, telling us that this sentiment just near term is very positive indeed. So we should see price making further highs, and sure enough we saw price bouncing on this upside trend, intermediate upside trend, quite clearly higher swings, higher, and then just recently. But you'll notice on Friday we had this exhaustion candle, bullish engulfing on Thursday, and price headed up towards the 1300. However, you can see quite clearly near term we've had a pullback yesterday on Friday's evening, and closing lower than 50% of the actual candle wick. And you can see over the Asian night session, you can see the Asian session falling lower, but still being capped by the 23.6. So as long as 23.6 below here at 12,900 is still in play or acting as support, then potentially we could see price reattempting the 1300 quite soon. The histogram on the other side very much blue. The other option would be to see bearish engulfing here, and if that's the case, then you can see that we have a lower swing, which is lower than the previous one and this previous one. So you can see sentiment still looking negative, and then we should be targeting the area here where the institution moving averages on our daily, which is roughly around the 12,800 mark. Moving to the 4-hour time frame, you can quite clearly see that price has actually found support just recently on this 1283 as we did previously, and we saw a bounce. However, just near term, in the last 4 hours or so, since there's a session open at 2 o'clock this morning GMT, you can see price, a nice bearish engulfing candle now after this bearish consolidation at the underside of 1300 here, going into 6 GMT PM on Friday evening on the US session. Price pretty much falling to the downside. However, you can still see that the institution moving average is still below price, and we are still above the 12,800, which is our institution moving average on our daily. So quite clearly, as long as we remain above this, then we should see price moving between the 1283 and the 1300 as we consolidate between these 2 points. You can quite clearly see over the past, since the 1st of October, price has pretty much been channeling in this range, and as long as it maintains above 1283, then we could see potential price to move back to the upside. If we get below the 1283 as soon as possible, break below that, then it's going to tell us that the sentiment is looking really negative long term, and we should be targeting to the downside. Next on to sterling, let's have a look at the weekly. Clear failure here, just near term against the prior support and resistance level here at 16,300, and we had this indecision followed by bearish engulfing here. So almost an evening star formation at a prior support and resistance level high here on the weekly, and prices reverses to the downside. I've taken the low here in June to the high, and you can see I've drawn the fib retracement areas. Just near term, we had an indecisive prior weeks ago. However, last week we saw price moving to the downside and closing smack bang on this 23.6 fib retracement area. However, the start of this week, we've seen price now falling at the underside. So you can see the open, and we've just seen price just falling since the open on last night's session. Let's have a look and see what it's like on the daily. And there we go, you can see 16,300, that major resistance level, a lot of exhaustion candles at this area here. We wanted a nice confirmation signal, and we sure got it, bearish engulfing candle, and price reverted down to these levels. Near term, you can see prices now trading at the underside of this area here, and we had a pullback, a little breakout of the support here, bearish engulfing, the breakout, the pullback, and now we have today's candle finding resistance. Well, we saw Friday's close very indecisive at the underside of this area here at 1607. And this morning on the Asian session open, we've seen price moving to the downside now. So we want to see a bearish engulfing candle to confirm this is genuine breakout, and this is a genuine pullback with a continuation in the direction of the breakout, because you can see that we've seen lower swings recently. And yes, the histogram is still positive. However, that's primarily because we're still trading above the institution moving average, and that sentiment is still, as long as we trade above the institution moving average, is still positive. Okay, so intraday we want to see that 1607 mark still being a major resistance level, and you can see lower swings the upside here. So you can see also, and you can see where the institution moving averages on our daily, on our 4 hour now. The institution is above price. Beforehand, you can see price was trading pretty much. You can see the price was trading above the institution. Now you can see the price is trading below the institution, and that's a negative signal on its own. We can look down here all the way down to 15,400 as our target. And you can see quite clearly that we've had a failure now at the underside of the institution now at that 1607 mark. So as long as price remains below 1607, okay, you can quite see price support and resistance here now. As long as we see price trading below 1607, we should be looking at price attempting the 1600 mark, which is a round number, psychological round number. Get below that, bearish engulfing below that, then we're going to see price ultimately moving to the downside for the foreseeable future. A lot more red happening and less blue happening just near term. You can quite clearly see the histogram now, a real psychological change between very positive and now a lot more red happening. So almost a negative, a change in negative sentiment now, and we're seeing that changing of the guard. So as long as it remains below 16, it gets below 1600 as soon as possible, nice bearish engulfing candle, then ultimately we should be seeing price moving to the downside for the foreseeable future. RSI is below 50% now, so everything's looking negative. We just want to see everything coming across on our, there we go. So on our hourly, we have a genuine entry candle. Just got to wait for the close below this consolidation. So we wait for this hourly candle to close at 8 a.m. GMT this morning. If it closes lower than this little supported and resistance area here at the 1602.50 mark, then if you want to do a quick intraday, well, it's a bit too close to do the 1600, but ultimately we could look towards these lows here at 159800 mark. I'd like to get below all this before I actually look for any further downside move. Otherwise, you could be trading into a pretty strong support and resistance level in and around this area. Onto the US dollar Swiss franc. And look at this pair. You can see quite clearly that price has been moving down since mid part of July of this year, after we came into contact with the 1000, which happened to be a major long-term weekly support and resistance level. And since then, you can see that very much so that prices, the histogram has been very much red, and you can see prices really fallen to the downside. Near term, however, you can see prices actually trading below the institution moving average here, just below the 9400 mark. And this is the first time, like its European counterpart, in this case, you can see prior October last year, we were trading above the institution. Now you can see we're trading below the institution. And as long as we maintain below the institution, then ultimately price is still going to look negative long term. However, you can quite clearly see that after you broke through it for the first time here, September of this year, price reverted to the upside and reattempted the institution moving average. A lot of indecision candles here, and price reverted back towards its 9300, pulled back again to the institution moving average here at 9400. Another indecision candle followed by bearish engulfing, and then we saw price reverting back to 93. So you can see it's trading within a channel near term. Okay, so we want to see a break of this channel either way. Ideally, if it's still negative, then we want to see price moving lower than 9300 and closing lower than 9300, and then falling to the downside, because we're still trading below the institution. It's still negative. Yes, we're consolidating. It's consolidative under a negative, in a bearish trend. You can see we've seen lower swings, which depicts downside movement. So everything's looking negative at the moment now. It's just that we're finding a bit of support at the underside of it at 93. So if this is still to remain negative, we want to see 9300 being broken as soon as possible. A nice bearish engulfing candle, something like that over here somewhere. Just breaking through it with a lot of momentum telling us, listen here, that the US dollar is still looking very weak against the Swiss franc. The other option would be to see price consolidating yet again at the underside, and finding or trading between these 2 points, between 9300 and 9400, backwards and forwards. So either one or two things have got to happen to get a genuine signal. It's either going to be a nice bullish engulfing candle break above 9400 to tell us, listen, yeah, this is a nice sound support now at 9300, and we're going to build on it to the upside. And then we should be targeting the price support and resistance level breakout here at the 950-200 mark, 9600, 9700, and then all the way back up towards 1000. Or the other opportunity would be, because everything is still negative here, everything looks very, very negative indeed, we want to see a bearish engulfing candle, because in that movement will be in the direction of the sentiment, and the sentiment at the moment now is sticking negative on this particular pair. US dollar, Japanese yen, the last pair of the day, and let's have a look and see. Near term, you can quite clearly see this price of here being ranging between 78 and the top side here at 7900. Notice from the fall here back in March, all-time high at 8400. Price failed to rally through that major support and resistance level on our weekly time frame, and gave us a lot of indecision candles here, followed by a decisive bearish. And since then, we've actually just been trading lower. Notice to be a lot more red happening near term than it was before. We saw a lot more blue. You can see quite clearly that the sentiment is genuinely negative and prices reversing to the downside. A lot of swing lows, and even though we're finding support here at a major support and resistance level at 78, you can quite clearly see last year a lot of resistance through here. This year, near term from June onwards, we find a lot of support. Price is now being squeezed. Okay, each time it's bounced on the 78, it's bounced to the upside, and each time we've had a correction back towards the 78, these highs have been lower than the prior high. Okay, and so that means straight away that these current highs are getting lower than the previous ones, which is telling you that market sentiment is still starting to look very negative. Okay, the longer it goes, or we found support at 78, the more likely to bounce. However, you can see these highs now getting very, very small, and we're now being squeezed. Okay, we squeeze, lower swing, lower swing, lower swing, lower swing, lower swing. 78 is still there. So now we're getting this squeeze pattern. It's becoming quite aggressive now because we're getting right towards the end of it. Something's going to happen quite soon because of this here. And you can see that the close on Friday, very indecisive. The spinning top, yes, it's still above the 78. And you can see that for the first time in the last month or so, a month and a half, you can see we had a blue indication here telling us we should be looking for buying sentiment. However, we don't trade indecision. We want to trade a decisive candle. Ideally, if you want to see a decisive move to the upside, it has to close above the prior swing. And you can quite clearly see the prior swing was this little high over here. Apologies, if I can just get a nice straight line, that'd be great. If I just draw a straight one, it'll probably be better. There we go. So roughly we want to candle the close bullish engulfing above 78.70 at least, and then we could target at least into the 79 going into the institution long term. If we don't get that, then we could see price either finding resistance here again, and because there's a clear resistance level above us here, then we could see price moving back to the downside. So we want to see a bullish engulfing candle here first. Let's see what happens on the daily for today's US session trading. If we get a nice close above 78, then we should be targeting the upside near term. If we fail to see that and we see a bearish engulfing or an exhaustion candle, something of this sort in around this area by the end of close today, then we should be targeting the 78 near term for the foreseeable future. Okay guys, that's it for today, and please have a look and see if there's any news announcements today that could factor in price action movement today and the volatility or the sentiment sign. Very important to make sure that you are aware of these fundamental news announcements. Other than that, if you are following this particular strategy template, please follow the rules of it and back it up with sound management. Okay, other than that, keep it simple guys. Very, very important. Don't overcomplicate your trading. Make sure you plot your major support and resistance levels from your dailies and weeklies to your intraday time frames. You'll be very, very surprised how they can come in. And then have a basic knowledge of candlestick patterns. I've used them for many a year, and I find them very, very, very good for giving me sentiment, or price sentiment, where the direction of the sentiment lies in each candle. And it's very, very important. You'll be surprised how it actually helps you out a lot more than your common indicators. Other than that, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.